Hello and welcome to the Nord Search podcast. Today, really happy to be joined by Jacob Dalton, the head of trading at Tibber, who are a digital energy company focused on the spot and wholesale markets. Jacob, thank you for your time today. Great to have you on the podcast.
Great to be here. Thanks.
It'd be cool, Jacob, if we can start just with an introduction to yourself, your background, obviously how head of trading, what you're responsible for, but perhaps how you got there as well, and then we can go into Tibber and all things that are going on. Exciting times.
Sure, certainly. Jacob, I'm originally from Australia actually, and there I did a civil engineering degree and worked in construction management for a few years until I wanted to pivot a little bit more into sustainability and realized I needed to upskill. Got into a master's here in Europe, first year in Barcelona, and then second year at KTH in Stockholm, part of the Inno Energy group. And there I actually then did my thesis with Tibber, looking at electric vehicle flexibility. So I worked as a control and optimization engineer, so building the algorithms that enabled us to deliver some of the services that we're still doing today, like frequency containment reserve, for example. A couple, 2 or 3 years there until then, as Tibber continued to grow and scale, the opportunity presented itself that we actually really doubled down on a trading team and started recruiting our first traders, our first quants, and building a team around this effort that's now somewhere between 15 and 20 cross-functional, both engineers, back-end engineers, data scientists, traders, etc. And now we're core to the strategy of the business, building something that we've always been building, but we haven't really been calling it a virtual power plant until it became the industry buzzword recently. Yeah. Tibber's arguably been doing just that for over 5 years already.
Okay, cool. So you mentioned obviously you've been growing quite a lot in this area. So when did you start focused on building your own trading team and obviously hiring the right people you need for quants, data scientists, traders? How long's that journey been going on for?
That was somewhere between 2020 and 2021. So I started when Tibber were 6 people in the Stockholm office and maybe 12 people total. Now we're 300 with exactly 20 just in the trading team. So it was exactly 4 years ago, potentially. So the first pure trading data scientists and traders, 3 or 4 years ago.
Yeah. So it's been an exciting journey in a short space of time.
Indeed. I mean, the whole Corona and then the war, I don't even remember those crazy months, yet alone what's happening now in terms of our product development, which is also very exciting. But yeah, too much most likely has happened.
But it'd be cool to talk about, like, for people who don't know, what Tibber actually do. And you mentioned virtual power plant. It is a buzzword. Yeah. I see it a lot. So for people who aren't sure exactly what that is as well, good to enlighten people.
Sure, certainly. So Tibber was founded in 2016, a Norwegian founder and a Swedish co-founder. And they actually both came, Ed and Daniel, from the energy industry, but building tech for the incumbents like Eon and Vattenfall and the rest. And after many years of doing that game, they realized the only way that they could actually change the industry in the way that they wanted to see change was to do it themselves. So they split off and started Tibber in 2016. Then we're now active in Norway, Sweden, Netherlands, and Germany. Have over 500,000 households that we're providing energy to, but there's over 1 million households that are integrated to our platform. And that also means by default, there's 1 million or more than 1 million devices that are integrated to our platform. So hundreds of thousands of EVs or wall boxes, chargers, inverters, electric heaters, etc. So the foundation is hourly spot pricing with zero markup, zero profit margin. So we have no profit from retailing energy. The profit comes rather from a fixed fee per month. It's just been raised, so I think it's €5 now, roughly, depending on the market. That's one of the main revenue streams. We also then introduced a concept called power-ups. That's what we call the devices that you can integrate to Tibber. And on top of that, we actually sell them in an e-commerce platform. So that's our second revenue stream, is then selling hardware, both our own like real-time meters that we've developed, or real-time streaming devices that push your real-time consumption to our cloud. And the Tibber Pulse, it's called, and that's been incredibly successful, especially in Germany right now, where there are no real-time meters, or hourly meters aren't really rolled out yet. And with the Pulse, we're enabling German customers to have part of that experience. So, but back to the platform and the e-commerce platform, we resell, but also our own hardware. Second revenue stream, and the third revenue stream that's always been there, but in all honesty, until the war in Ukraine, wasn't a key pillar of, or the central pillar of our strategy, which is demand response, we used to call it, or virtual power plant then. So monetizing the flexibility that we now control is absolutely central to our strategy. And that probably makes a lot of sense, given that it's only now that we have the volume that is significantly interesting, and perhaps 4 years ago, that wasn't the case.
Yeah, no, absolutely. I think flexibility now is the big opportunity for a lot of companies like yourself. So is that where you see a lot of the revenue growth potential for the business?
Indeed, definitely. We've been scratching the surface in terms of flex. So core to the user offering is minimizing cost by optimizing according to the spot. And this, we've been doing smart charging, which many of our competitors call VPP. We've been doing that since 2018. So we were one of the first, could argue the second in Sweden. We essentially normalized smart charging in the Nordics. And we have a huge subset, or a huge share of the EV market in the Nordics, where basically most people who have an EV have a dynamic tariff, and then you're going to use some sort of smart charging service provider. And we were the first, you could argue, in many ways across the Nordics. But obviously with that, none of that value, the spot optimization, is kept by Tibber. It's passed on directly to the users. We have done things like FCR, delivered frequency containment reserve, in Sweden to Svenska kraftnät for many years. And even there, we were the first in Europe to do that at scale. And we've been doing that for a couple of years now, every day, in the tens of megawatts scale. And we've also been involved in local flexibility markets in Norway significantly, and also in Sweden. They are commercial, but still relatively pilot scale, and also a number of MFRR, AFRR pilots with Statnett. But because our whole product is built around the spot price and hourly tariffs, we're actually constrained to those price signals, because the users not just don't see anything else, they're not billed to anything else. Everything is built around the spot price. So if we were to do something that didn't make sense according to the spot price, our users would not only notice that it looks wrong, they would actually pay more. So that's been an enormous constraint for us until recently. And that's, from a trading perspective, that's the biggest step forward that our new feature that we've recently just released, literally a week or two ago, is enabling. It's literally enabling us to steer according to any of the other signals apart from the spot price. So intraday, MFRI, AFRI, local flex, enabling us to shift energy and share that revenue with our end users.
Okay, yeah, so that sounds quite innovative. I've not come across that before.
Yeah, it's I'm rather confident that no one's tried to do it this way. It's biting off a lot, and it's been incredibly challenging. And I mean, the reception is good so far, but time will tell, to be honest, if this was the right way to do it. For example, Tesla, I know very well, are looking to do the exact same thing, but they have gone with a fixed price model. So the user, it's a black box. You pay this much. In the background, Tesla are doing arbitrage, providing balancing services and all the rest of it. But for the user, it's very simple. It's very clean, but it's a black box, and arguably it's not engaging. And that's, a punt and a bet we've taken, that we believe there's something in the middle. We shouldn't be talking about FCR and intraday and exposing infinitely changing high frequency markets. But we also don't want to have a black box. We need to show some transparency of why we're doing things when we're doing it, and also to be part of the story of the transition. Someone has to bring along 700 million Europeans along the energy transition and end user Europeans. We believe some level of engagement is important to do that, and a black box isn't good enough, despite it being very clean and very simple. So there's some optimal to be found, and we've made a stab at the first attempt at it, and time will tell, essentially.
Well, obviously, if you're being first mover, it's never easy, and you're trying to solve very complex problems. But for those who, it'd be good to understand a little bit more about what this product actually is. That'd be really good to understand.
So essentially, it's an additional feature that today is built on top of chargers and electric vehicle charging, but with the vision for essentially all controllable devices in the future. Heaters, batteries, inverters should be part of the central feature called grid rewards. And the idea is that when we are charging at a high spot price, because in the intraday or in MFR or in whatever other market, the signal is telling us to charge because the price might be minus 1,000 in the imbalance market in the Netherlands, for example. We're able to solve the UX problem in a way that tells the users, yes, we know it's a high spot price, but actually there's more to spot prices and there's more to energy than just spot prices. We're doing this on purpose. We're doing this by design. We're helping the system. There's value in it, and you're getting a share of the reward. So simply put, that means that when charging is happening because of a grid rewards event, or charging is paused because of a grid rewards event, users are notified in one of the screens of the Tibbers app, and I can share screenshots, etc. after, where therefore it says grid rewards ongoing and money ticking in. So users see money ticking in, they see grid rewards is ongoing, and they see the price they're paying is not the spot price. So they're getting, so grid rewards therefore in the end is a mechanism of how we share the revenue that we're generating by doing the orchestration and the arbitrage.
So is the idea then for consumers, because you go directly to consumers, would this help them get better prices?
Correct.
And is that also for people who are obviously quite motivated to help the energy transition, they'll get a bit more information or have more of an awareness of how things are done? Is that what we're saying here?
Exactly. So that's the two pieces. 100%. It's the grid rewards, and in fact, we've built a communications campaign around a grid hero with TV ads, etc. Where the average Joe Blow or woman with an EV is playing an active, not just an active, a central role in the energy transition and accelerating the energy transition by essentially sleeping. Because the only change in behavior is to plug in their car more often, and we do the rest in the background. The car has to be full in the morning. The house has to be warm. We can never go beyond those user constraints. And if we do, we failed, and that's unacceptable. But exactly, it's actually building a story around arguably what should be the most important story anyone is playing a part in. We have 20, however many years to get to a net zero carbon economy and future. But on top of that, if we do our job well, especially from the trading side, and yet alone all the orchestration and the other teams throughout Tibber that have had to execute on this, you cannot get a better price. This will beat spot optimal, which essentially we're subsidizing energy.
And is this the challenging bit?
The revenue generating bit?
Yeah.
I'm relatively confident that we're going to generate some revenue or significant revenue, whether that's, we're talking about users who have invested in an electric vehicle, but our understanding is the sum in itself, the absolute sum in itself is less important than the feeling of, holy shit, my energy company is giving me money back. Yeah. And I'm getting a negative line on my invoice. And that is the paradigm shift, which isn't that weird when you understand the service that you're providing to the system and society.
Which I think is a huge difference to what customers were seeing in 2022, where their prices were going through the roof.
Exactly. But at the same amount of time, I mean, it is incredibly complex, and we've tried to slim this down as much as possible. Yeah. But grid balancing, or any of these terms to a normal person, is, and that's arguably our job. Hourly pricing was also completely bizarre until Tibber came along in the Nordics specifically, and now it's the norm, and that's had enormous benefits for the transition and society. And this is just the next step in the paradigm. Just like fixed pricing is old news now. Arguably, hourly pricing, by definition, the day ahead price is a day old. It's old news. Why are we steering gigawatts across Europe of electric vehicle charging to a signal that was set 24 hours ago and doesn't represent the physical reality right now?
No, interesting. So is that where you see the future, the next 12 months, 2 years? What do you think the landscape is going to look like there?
Good question. I mean, this is so incredibly
very
fast
fast
moving.
dynamic, isn't it? Space.
With API aggregators now who are basically, I believe in not so distant future, or you can already do parts of it today, to buy the components of a VPP off the shelf. And that means that the incumbents who were previously blocked out of such a play from a technical perspective won't be anymore. And then arguably, again, it's about the user experience. And we believe we're in a pretty unique position to be fast moving, user-focused, user-centric startup, to be able to iterate on that user experience in the most optimal way, as opposed to potentially other larger, slower moving companies that have to collaborate across maybe 3 companies to execute on what we've been able to do internally.
Yeah. So user experience there, you mentioned, and you said you've had enormous focus on that, whereas it probably hasn't been that important in the past in the sector. So like, what do you think is going to be like the big difference in user experience for a customer at Tibber compared to someone who's not actually ever seen Tibber before?
I guess the segmentations are important here. Would you say specifically talking about an EV owner, for example, or someone with controllable load at home?
Yes.
Yeah, opposed to an incumbent, even they are catching up in terms of, for example, smart charging. Then the primary difference is back to no profit from retailing. We're not an energy company in the sense that we want to sell kilowatt hours. Simple as that. And we never have been. That's not an incentive because we have no profit margin from the kilowatt hour. And therefore, in the long term, or even short term, we're incentivized to help users lower their costs and their energy consumption, which fundamentally H&M wants to sell more t-shirts. Vattenfall and Eon are going to want to sell more kilowatt hours. And so that's a complete paradigm shift in their business model if they were to truly offer hourly spot prices. And I know a lot of competitors who offer smart charging or VPP services now. For example, they have a fixed tariff or they have an hourly tariff with a profit margin, and they give you back some of that. Basically, I'll charge you an extra €3, but I'll give you back 1. So you're still paying me 2, but it looks like a great deal because I'm paying you for your smart charging.
Yeah.
So I guess because this landscape is so complex, it's so difficult for users to navigate and actually compare offers in a sane manner on top of, all of the short-term campaigns that is also standard in the industry. So I presume once competition, actually, there's going to be a bit of a shake-up, and eventually users will be able to make that decision in a very clear manner that, it's a no-brainer. You compare the bottom line of the 2 invoices and there should be a clear winner.
So you very much like a disruptive model compared to what has been done for a long time and has been commonplace.
We believe so. And the challenge is, again, the UX and the complexity and the risk of hourly pricing, and not just the risk aversity, but also it's new, it's scary, and it's dynamic. And what the hell is that? I'm not used to that. And that's like any other paradigm shift that, depending on how well we're able to lead users along that journey, that's going to determine if it's a successful shift or not.
Yeah, absolutely. And for someone as the head of trading, so you're responsible for trading and you're hiring people, like you mentioned, you've grown the team, and are you continuing to hire at the moment?
Yes, we've actually just recruited a couple, 2, 3, 4 engineers in the last couple months only, and they've just recently started. And at the moment, we're eagerly after a senior engineering manager to lead the engineering efforts across this VPP building stage and execution stage. That's not an easy candidate, of course, because ideally they have trading background. That's a very small pool in Europe, indeed.
So when you say trading, are you referring to specifically like the intraday trading market?
Not
or short-term
specifically, but yeah, short-term power markets ideally, or experience and flexibility, virtual power plants, not necessarily distributed energy resources, but can be the larger scale virtual power plants. But then, of course, also all of the standard cloud technologies that we're used to today in energy trading, or that's coming online in energy trading very rapidly.
And for you as the leader of the team, what typically separates like really top candidates for you from the rest of the candidates that you see?
Yeah, we've been lucky, or we've been skilled in recruiting to have built a very strong, high-performing team at Tibber. In fact, now it's much it's a self-fulfilling prophecy, all linked, because the company is putting a lot of backing and into this strategy. But I would say I have to pick one, especially in the phase we're still in and have been in. It's the element of being self-driven and self-motivated and showing initiative, of course, coupled with competence and experience to actually take things forward and not run in the wrong direction. That's been huge, at least up until this stage. We might be moving into a different stage now where it's all about, breaking down silos in the teams that maybe previously had a few key individuals. We now have many more engineers that need to come on board, and that might be a different kind of skill set, arguably, than the engineers or the best candidates that we've had on board until this day. But I would say that's a couple of the points. Collaboration is a huge one now, anyway, that I'm noticing. The ability to coordinate, given how complex everything is that we're building, to coordinate in an efficient way. And that could be as simple as, best practices in how to communicate in Slack, or, not having private messages in your communication platform. A lot of simple points there that you can tell, or I have noticed a couple key senior individuals coming in and kind of shifting that collaboration mentality and culture in the engineering org.
And I think that's something I've seen as well, like collaboration, like all the best data scientists, quants that I speak to, collaboration is one of the top things they talk about. They want to collaborate with other top performers. They want to knowledge share. And I think previously, maybe going back 3 or 4 years ago, even longer, it was kind of like isolated, that you'd have 1 or 2 people just getting on with a project and not really working in teams. And now it's just seen to be like, if there's an environment where that's happening still, they want to get in an environment where they can collaborate more. Is that what you've seen as well?
100%. And I think it also simply goes with the level of complexity. Just like a human trader isn't going to be able to click as fast as the algorithms are, there's simply no way a handful or 1 or 2 or silos could execute in some of the projects that we're executing now. It is, yet alone the fact that there's legacy and the context exists anyway, and that is part of the complexity. And it's simply not possible without top-notch, skillful collaboration. And it's not just, I want to do it and it would be nice to do it. And I prefer working in a place where it works. It needs to work well. And to work well takes skill and takes a lot of effort.
So for you, like, what is that effort to make it work well? Is it process? Is it getting in the office together? What do you think?
Yeah, it's a lot of the above. It's also org structure, for sure. Interestingly enough, you're going to work tighter with the team you're in. So the structure and the construct and the boundaries of a team is defined by the organization, and by definition they're setting up silos, or where there will be less silos in any case. So a reflection, to be honest, recently has been maybe the need for a more fluid structure, where we've set up structures and teams and product areas 2 years ago in a different world. And when we never got to that world that we intended to get to, and we're not getting there, why are we still in the same structure, for example? And that's a relatively fast-moving, agile startup. So I can't imagine what it's like in a normal incumbent.
And you mentioned like that about how teams work. So are you guys all in the office, fully remote, distributed teams, like a bit of both? Like, how does it work?
In trading specifically,
Yeah, in trading, yeah.
it's a bit of both. Primarily, we have been the majority of the team had been in Stockholm until
Yeah,
recently. I think now we may have passed the 50-50 point where it's Stockholm based or spread out everywhere. So from Spain or Portugal, actually recently, Berlin, Amsterdam,
yeah,
Norway. So yeah, we're very much spread out now. The team who sit in Stockholm are often in Stockholm. And then we have, the typical offsite every few months where we get together for a week and do the mob programming sessions and the workshops and the social things and really get to
yeah.
know each other.
Okay. And do you see that being the best way to work, like as this team grows, distributed?
Yeah, it's tough. I don't think we would be where we are if we were distributed at the start. Yeah, it's just what it was. That, the first few individuals sat very close to me and we all worked really closely physically together in
Yeah,
Stockholm. But then in the end of the day, yeah, talent pool and also rejecting all of the incredibly talented people not in Stockholm isn't
yeah,
sustainable either. So I'd much prefer to be physically close, of course, but that's just
yeah,
not the reality of the world anymore. There's an optimum balance there to be found in the middle that works.
yeah. I think that's the best approach. Like if you can get in the office together, then great. But also, especially what you're trying to do, which is so innovative, and the talent pool in especially short-term power is so small. Don't miss out on great people if they want to work for your company
Exactly.
and are open to having FaceTime with you guys, but just can't quite commit at that point to move to Stockholm.
Exactly. And to be fair, so the company has always been spread out with
Yeah,
offices throughout all of our countries, and arguably some of the key individuals that have come in more recently who don't sit in Stockholm have actually been able to build that best practices and collaboration because they aren't physically in Stockholm, and forcing the rest of us to, yeah, be mindful of the fact that, yeah, there's a huge subset of the company online.
yeah.
That's something to be mindful of.
So for anyone watching this who loves the sound of what you're doing but can't relocate, they should still hit you guys up and
Definitely.
send their application.
Yeah, without a doubt. I mean, there's plenty of barriers and challenges that the
Yeah,
industry and the government and regulation need to get over, in terms of data sharing and open data, essentially.
yeah.
That's a huge barrier to flexibility at the moment.
Okay.
Concretely, vehicle OEMs who expect to monetize that data, and much like banking went to open banking, the user who bought the BMW or the Tesla EV, they own that data. And for the OEM to try, yeah, I'm not so sure that's a long-term strategy, but it's currently a barrier for untapping flexibility, which is therefore slowing down the transition. And so that's one thing we should be talking more of, and basically moving together as an industry. I won't be surprised if Brussels, within whether it's 1 year or 5 years, will enforce these sorts of moves, as in the European Parliament.
So the big barriers there, you think, is just specific legislation that needs to be coming in and
Yeah,
help.
well, standardization in a lot
Yeah,
of the APIs and the communication protocols, but also that they're open. There's open access telemetry data of all forms of small scale devices. Because at the moment they're not, and it's difficult and it's challenging for a fast moving agile player like Tibber to make one-on-one integrations. And again, there's API aggregators now, but yeah, imagine a less technical competent company, how slow that sort of barrier makes their acceleration of the transition.
and do you find that's country to country quite different?
In terms of the markets,
Yeah,
if looking at, say, for example, it can be the similar story from the device perspective, but also the market perspective. In terms
yeah,
of the markets, sure, there's a difference in terms of country to country, but yeah, the devices and the OEMs, I guess they're multinational companies now,
yeah.
and they're throughout Europe. So it will be a tipping point when, like Tesla's already started, they opened up their official API with open documentation.
So would you say Tesla are like the main competitor that we're talking about here? Is there any others? Like obviously everyone knows Tesla.
Yeah, many others. Octopus,
Yeah,
and Fem. Exactly. Those are the two huge ones coming. But Tesla, definitely, we've kept close tabs on for quite some time. And it's a matter of time until they come head to head in one of our markets. They will be an energy provider in the UK. They have a retailing license. The only difference that sets it apart from a Tesla is Tesla's perfect if you are a Tesla fanboy with two Teslas and a Powerwall and maybe the inverter. But if you're 99% of people with Panasonic heat pump and a Huawei inverter and a BMW, your partner has a BMW, yeah, why have Tesla as your energy provider or your aggregator or your VPP platform? Unless they go open, of course, which, yeah, let's see what Elon says.
yeah. No one can quite predict what Elon's going to say
Yeah.
from one day to the next.
But I know they're
Right.
considering it. That'll be a big point for them.
Must be quite exciting to be playing against those kind of competitors.
Yeah, certainly.
Shows you're in the right space.
Yeah, definitely. I guess the big difference between Tibber and a few of those guys like Octopus and FM is the war chest. We've basically had a different journey and a different strategy from that they're coming into, and that has positives and negatives. And
yeah.
We'll see.
What is your capital history? Is it venture backed?
Correct.
Yeah. And what phase are you at the moment, stage wise?
I had a Series D.
Yeah.
So exactly, it was 100 million in the previous round. That was, can't remember now, just before the war.
Yeah. Something I'm seeing is there's definite still strong appetite right now to back companies like yourselves, or are you seeing it becoming like a little bit trickier? Like what
obviously trickier with the current credit landscape, but irrespective, everyone sees this VPP bag of gold.
Yeah.
And arguably no one has executed yet, and that's what we're hoping to do at scale. We have executed at scale, but only scratching the surface of all the potential value, and that's what this latest feature is all about.
Yeah. And is the plan, obviously, not Nordics, you're the dominant player, you're going into Germany. Is the plan to expand wider than this, looking at outside of maybe Central Europe?
Yes, exactly. So 500,000 paying energy customers today, but the vision is 10 million across Europe. So definitely multiple markets, and we've looked at many of them for many years. So it's a matter of time, but at least in the short term, the focus has been to win these 4 markets, and it's going particularly well in Germany at the moment, and waiting for the smart meter rollout next year, of course, to really fuel that market.
Well, something that surprised me was when I was at eWorld, is listening to some of the statistics about how few Germans actually have smart metering in their homes. Like from the UK, I don't know the exact number, but it just feels like it's been pretty normal for the last 5 years at least, probably longer. So Germany to be so far behind, 1 was surprising, but 2, I guess for you guys, it's just such a huge opportunity with it being such a big market.
Indeed. Exactly. It's been incredibly challenging for a couple of years. Well, now we're arguably seeing some of the benefits, but yeah, it was a very, very tough period with Germany. Hopefully it's paying off soon, or will continue to pay off that investment to be in that market.
Yeah. And what was the reason for the slow adoption? What were the bottlenecks there?
That's a huge question, but the short answer is German bureaucracy. If you speak to anyone in Germany who has had to do anything bureaucratic, they will laugh. Yeah.
Cool. Well, look, Jacob, thanks for a really interesting and insightful conversation. Like, I find it awesome what Tibber are doing, actually spearheading this focus across Europe. It sounds like you, with a product release, this could be something huge for the market. So, it's really interesting. And like I say, if anyone is listening to the podcast who wants to know more about Tibber, check out their career page, check out their product release that has just happened recently.
Rewards, correct. Just the beginning.
Yeah.
Thanks, Patrick.
Absolutely. Thanks for your time, Jacob. Appreciate it.
Cheers. Bye.